What's up? I'm Dan Fredenberg, and this is another Chance Encounter.
Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building.
Joined today with Christopher Elder. How you doing today, Christopher?
What's up, guys? It's a great day to be here.
Absolutely. And I got some great news for you, Christopher. Today, we are joined by my very favorite audience member. And why is my favorite audience member here? It's because this is a chance encounter where I interview commercial real estate investors, syndicators, operators, buyers, sellers, all that kind of stuff. Now, why would I do such a silly thing, you might ask? Well, if you've ever heard of private off-market or 506B deals, you'll find out that you need to have a documented prior substantive relationship, or else the SEC will get ants in its pants, and that's bad. So what I do is I interview people real quick in a 15-minute format, finding out what they're up to in their business and who they're looking for. And the benefit to you is you learn how to effectively communicate on the subject of commercial real estate. But before we get too deeply into deals and business and all that kind of stuff, Christopher, do you want to say a thing or two about yourself before we start?
Yeah, so initially from Louisville, Kentucky, I went to college down here in Nash Vegas, as they call it, at Vanderbilt University, and moved back to Nashville, kind of here full time, but I do kind of travel back and forth. Of course, got the family up there, and really just starting to kick off the syndication platform, Carmel Rock Capital. I got my first taste of the commercial real estate business working down in Atlanta with a developer down there, and kind of peeled my way back a little bit about the whole world of real estate and decided to spread my own wings, so to speak. And here I am on the Dan Does a Deal show. So.
Excellent. I love it. I love it. And that brings us to the 5 distinct motivations for getting involved in the deals. But before we do that, I got to say, but wait, check your 8. Christopher, you're fairly young. I'm not sure if you have the tech savvy to see through the camera and down at the 8. There might be this hideous subscribe button in the user's device that maybe they should, okay, it's a stupid joke. But anyway, the 5 distinct motivations. I've spoken to a whole whack of different syndicators, investors, operators, all that kind of stuff. And everybody has their own unique why. But at the same time, I find that those reasons fit pretty neatly into these 5 categories. And I go through them in every episode because it's important to know why somebody is going to stick around through an entire deal, because they take months. There's plenty of risks involved. So we need to know what exactly is going to keep somebody coming back. The first motivation, preservation of purchasing power. What on earth does that mean? Well, some people already have a portfolio of assets, and the way that they make ends meet is from the proceeds of ownership. So if somebody already has enough properties that they don't really need to work a day job, the only reasons why they're going to make a new acquisition is either if inflation is rearing its ugly head and eating away from the purchasing power of that cash flow, or if they can buy at a steep discount, like if there's distress or an asset crash. Now, I'm not there yet. That's not where I am. What I'm up to is trading time for wealth directly. And what that's all about is I had a wake-up call coming from tech. Specifically, I own a CRM agency, which is for mass emailing and online businesses accepting credit card transactions and doing the different things that are involved in that. And in 2014, I started doing that for a firm in Ohio, and he was flipping 10 houses a month. He was doing 10 transactions a month, and he was making way more money than I was. But I was going like, well, wait a second, why am I paying more in tax than anybody else? So it hit me, how do I pivot and use these skills to where I'm getting rewarded in the form of deployed capital, aka equity, instead of good old dollars and cents in salary, because you have to pay too much in tax. So that's what I'm up to, but that's too abstract for a lot of youngsters, people new to this industry. So the more attractive thing for them is taking control of their schedule. And that might mean fast tracking retirement, but it might just mean working fewer months per year or fewer weeks per month or something like that. And the idea is that they want to basically dial it back in one way or another. But that's very different from this next group. They're just plain ambitious. They want to buy their entire hometown. They are after that generational wealth to make sure that their great grandchildren never have to hold a day job. And they're fantastic members to be on your team of general partners, because they're going to hustle into their 90s. They're not going to be, it's like, sorry, I'm taking a pilgrimage across the Sahara Desert or something, and I won't be available for 6 months or something like that. That's not how they play, and so they're great people to have. But there's one other group that is similarly motivated to keep going into their 90s, but their motivation is because they picked a sector of society, or maybe it's animals, maybe it's the environment, maybe they want to send people to space. But regardless, the common factor is there's a financial component to making a big impact. And so that's why they are making these commercial acquisitions, making use of equity multiples and all that kind of fun stuff. So Christopher, of these 5 different motivations, what combination of those would you say describes you best?
It's funny because actually today on my LinkedIn page, I just posted 5 reasons why I'm in real estate. So the divine disposition is working out perfectly here. So a little bit more so about me, I have to tell a little bit about myself. The main reason why I'm doing this, the main reason why I'm building up my LinkedIn following, why I'm doing all the sales and marketing and chasing off market deals and putting together different investors and stuff, it's really 5 reasons. The first one is to maximize time with my future family. As a lot of people probably know, a traditional W-2 takes up a third of your day. The other third, you're asleep, and the other third, you're tired from your day job. So I want to maximize time with my future family. 2, I want to provide for my family temporally, materially. Because I am a man, one of my main duties and responsibilities is to provide for my family financially, of course, just to make sure everything's all good. So that's another reason. 2, the third one is I want to free up more of my time so that I can provide for them in other ways, namely spiritually. That's something that you really can't do if, again, you're back at the W-2 for a third of your day, a third of your life. The fourth thing is the passive income component. So eventually building up the business, so at a certain point, I do have that passive income coming in that will allow me to take care of some of those basic needs, but ultimately give me more of an ability to do different work that I feel is more sanctifying, namely, spending more time studying, praying, working outside, farming, stuff like that. And then fifthly, doing this so that I can be the best future husband, father, and man that I can ultimately be. A lot of these motivations kind of come from my Catholic faith, which drives everything that I do. And don't get me wrong, any occupation can really get you to your goals, but this is kind of the path laid out for me right now. And those are the reasons why I'm in real estate.
I love that answer. And it's such a great way to start off the interview, because it gives you that warm, fuzzy feeling. And so we need to pour a glass of cold water on that for a second and do the tolerance for risk assessment. Now, if you've ever been involved in a private off-market deal, a 506B syndication, then you should have had to fill out a questionnaire from the securities attorney that has all sorts of invasive questions about your finances. As a matter of fact, when you fill that out, the syndicator is going to know more about your financial situations than you may know about your own parents' financial situations. But there was one question in that questionnaire that I thought didn't really serve the purpose that I'd want it to very effectively, and that was the tolerance for risk assessment. And so I made a new question, which is a fill in the blanks one, and I think it does it a lot better. There are many popular investment asset classes, but I think blank is too risky. So Christopher, it can be inside real estate, it can be outside real estate, whatever you want, but what's too risky for you?
Something too risky is something that I have absolutely zero prior knowledge about, zero industry professional connections with, and something I'm just going into blindly. The reason why I am so niched down and focused down is because there's a lot of tribal knowledge required to be successful in a certain, investment space. And if you are plugged into that, maybe you're not, but maybe your partner is, that is something that can help mitigate those risks. But if you're going in blindly, that's just way too risky because you have so many things that can take you down, so many obstacles you don't know about, you're not thinking about. And for me, it's a vague answer, but it's too risky if I just don't know what I'm doing.
Yep, I completely understand that. It's a great answer, especially because like there are many different sectors that what the investments are based in. When you're talking about multifamily, we're talking roofs over people's heads, and of course, the other one that isn't essential is food, like eating a delicious subscribe sandwich. That thing just kills me every single time. But that's how I know it's time to pull out the Dan Does Deals Core Commercial Competency Cube, and you can get your own copy for free from dandoesdeals.com. And like a complete dummy, I don't even ask for your email address. I just give it away for you for free so you can print it out. And why would I do that? Well, the answer is I know that the thing that's going to stand in people's way from success in commercial real estate is the ability to express what exactly is going on, what these different roles are. And so I want you to print it out. I want you to show it to your friends and family. But in every episode of Chance Encounters, I go through all 6 sides and explain them in under 2 minutes. So that way you know what each person does. Let's start with repositioners. Repositioners are acquisition people. Not everybody uses the word, but the term repositioner is there because this person has to have the wherewithal to figure out how can they find more upside. So they're going to be doing some underwriting. They need to do the math, figure out, okay, is this property even making the amount of money that the seller or broker is claiming it is? Because it's not so certain. But the other things that the repositioner has to do, this one's a little bit counterintuitive, is they have to have lots of relations with financiers. So that's lenders, banks, that sort of thing. Basically, people who only deal with paper and money. They are not on the GP team. They're not a general partner. They might be limited partners. They might just be lenders and all that sort of thing. But the reason why repositioners have to have such extensive financier contacts is because if they can secure a more advantageous loan, the business is automatically more profitable just because of that. So they need to have lots of financiers. But the repositioner, the more familiar part that they're up to find more upside is in operations, making them more efficient, stopping those Benjamins from going down the toilet. But of course, there's more to operations than just collecting rent and mowing lawns and unclogging toilets. One of the things that I bring to my teams, even when they are bigger properties where you outsource the property management, is if you have a vacancy rate problem, you need somebody with serious marketing chops to step in and make sure that those units are filled. That's one of the things I bring. And then of course, as a coder and web application, website developer, that means I've got all that sort of tech all buttoned up as well. But there's only so much you can do with operations as far as additional profitability. So frequently, the repositioners will get a contractor team to upgrade the apartment units. And that means they're doing value adds, they're making them nicer. The whole idea being that the next resident would be more than happy to pay more in rent than the previous resident did. And so that's why they get these contractors involved. But it's not a silver bullet. It's not a one size fits all sort of thing. You have to be very careful watching your contractors to make sure that they're not taking longer than they're supposed to and they're not using substandard parts. And if you're like me, see, I don't know if you know this about me, but I'm from the internet. So that means I need locals. I need boots on the ground, somebody who can be there in an hour or so, because that's not going to be me. I'd still be stuck at an airport if push came to shove and I had to get to the property. So having those local boots on the ground are absolutely vital. But when the repositioner has the property in mind, they've assembled this team, they're going to turn around to the financiers and hypothetically they're going to say, hey, I've got this 350 unit apartment complex and it's tens of millions of dollars. Want to lend us, I don't know, tens of millions of dollars? And the financier is going to have one question on their mind that I haven't addressed. And a lot of coaching programs, gurus and whatnot, they really gloss over this one. So this is the one to pay attention to. They're going to say, but who's the sponsor? Who's the KP? Now, what's that all about? So hypothetically, let's say you're an attorney or an engineer or a physician, something like that, and you're thinking, hey, what if my friends and I, we pooled our resources, everybody puts in like 100K, 50K, whatever it is, and we'll take over this commercial real estate property. Well, the flaw in your little plan is going to be that the banks are going to require that somebody in the fold already owns a similar asset. So if you're taking over a 350 unit apartment complex, somebody has to already own a 350 unit apartment complex. On top of that, between the team, you need to have a certain amount of liquidity and a balance sheet of at least the amount of the loan. But if you have all those pieces, you got yourself a commercial real estate deal. So, Christopher, as far as you're concerned, I imagine you're in the repositioner side, obviously some investor relations, also probably some asset management in the operations, but I don't want to put words in your mouth. Where do you see yourself fitting in on your next deal?
Yeah, so a little background as well. One of the ways I got into real estate was from my dad, who was a commercial contractor. So he's a GC. I kind of grew up in the construction world a little bit. So kind of have a lot of experience there. When I was working in Atlanta, a lot of experience in the underwriting. As I'm building this business from that right now, I got to do a lot of the investor relations. So for anybody watching out there and you wanted to get into the entrepreneurial world yourself, you first got to know you're going to wear a lot of hats, just like the one Dan's got on right now. Going to be wearing a lot of hats. So for me, when I in my stage, my career and my business, what I'm primarily going to be bringing to the table is putting the deal together. Primarily, we are looking for value add opportunities, or that would kind of put me in the repositioning standpoint. But as I'm building this business, I'm also still building up the investor base. So that's going to kind of come into the financier, you know, character, if you want. You're talking to different lenders, talking to different investors. You, like I said, you're going to be wearing a lot of hats. And then the sponsor KP is not what I have right now. I don't have that balance sheet to be able to sign on the dotted line, which you will need to do, as Dan said, to make a deal happen. So pretty much everything else, I'm going to try to do my darndest to get it done. But real estate is a team sport. You can't do it by yourself. You'll find out sooner or later that it's not possible. So the thing is, everyone has gaps that they need to have filled in. You just got to find partners to fill those gaps. It's a relationship business more than anything else.
I love that answer. It's a fantastic answer. It brings me to the next question, though, which is the buy box. And you mentioned your father's GC background, so it gives it colors in some of the lines right there. But when syndicators, investors, and whatnot are asking each other, "What's your buy box?" They're asking, "What are you looking for? What's your ideal property? What's easier to say yes to and more difficult to say no to?" And what we're really asking for, there are three things. First one's geography. Where is it? So you need to know which states, possibly which county, possibly which neighborhood before you label it as ideal. It's definitely going to matter. The second one's going to be size. Now, most of my guests on this show are in multifamily, which means it's apartment complex investing, but there are other forms of commercial real estate where it goes by square footage. But when you're talking about the size of an apartment complex, we use unit count as the way to define the size. And the reason for that being so important is because you're going to have a completely different group taking over like 7, 10, 15 unit apartment complexes compared to the 150s, the 350s, and so on. So that size definitely matters. But the third one is class. And unfortunately, they use that word for two completely different things, but really they're talking about the desirability in both cases. But I split them into two different words. First one's condition, second one's area. And when we're talking about condition, we're talking about how old is the building? How beat up is the building? Is it more or less up to date? Is it kind of no frills, bare bones sort of thing? Or is it full of luxuries and amenities, making it very, very desirable? So that's the condition. But the area, we're talking about things like, what's the crime rate like where that property is located? What about the school districts? How are those where the property is located? But of course, the old trope for real estate is location, location, location. But what they really mean is traffic, traffic, traffic. If it's somewhere that lots of people are going by in any business in any given day, it's going to be more desirable. But both the area and the condition are ranked the same way as in grade school, where you got A plus at the top, and then A, and then A minus, and then B plus, and so on. So, Christopher, you mentioned the value add part. That usually means you want C and B areas. But again, I don't want to put words in your mouth. What's easier to say yes to and more difficult to say no to?
Yeah, and I even have this kind of on my website too, just if you want to go back and refer to it at carmelrock.com. But here's kind of my buy box. So as Dan kind of said, I'm looking for traditional multifamily apartment buildings. When it comes to the size of it, I'm looking for anywhere 40 units and above. So really 40 is kind of that minimum number that we want to look at, and then going all the way up to 250 or 300. Right now, in the current state of the market, most deals on the market are pretty trash. They're pretty terrible. So a lot of our focus is going to be kind of some of those smaller asset sizes, going direct to seller, off market deals, really sub 100 units. But like I said, anything above 100 units, 200, 300, we love to take a look at. As a wise man once said, if it makes dollars, it makes sense. So we'll take a look at it that way. When it comes to the geography of the asset, like I said, I'm initially from Louisville, Kentucky. Know the area quite well, Southern Indiana, Kentucky area. There are a couple of desirable markets there that kind of go into what Dan was talking about as far as the class location. We have different macroeconomic metrics that we go by to filter out markets that we want to invest in. And that kind of goes to job growth, population growth, median household income, universities, schools, stuff like that. So there are a couple of markets in Kentucky that I really like, namely Elizabethtown, Lexington, Bowling Green, Louisville, of course. I know the area more better than anything else. And then also in Tennessee, where I'm at right now, Nashville, I have boots on the ground here. So I'll take a look at anything here, but kind of following those same market metrics, looking at Jackson, Tennessee, Johnson City, Clarksville, not so much, a little bit, it's cooled down a little bit, but geographically, that's where our main focus is. Now, as far as actual asset condition, so when it comes to vintage, I'm really focusing on 1995 or newer builds right now, simply because of the different insurance implications, and also operational efficiencies as well. Kind of the 95 or newer build is something that I want to look at. Now, right now, I'm looking at an off market that's built in 1920. So it all goes back to what I was saying. If it makes dollars, it makes sense. But that's kind of where the focus is right now, the 95 or newer build. And so that's going to be more so, a B minus or C plus plus in some of those sorts of areas. And not to get too granular, but brick builds, pitch roofs, central air, stuff like that. That's kind of our buy box on the multifamily side. Now, just to add a little bit more, in case you're still listening, also look at mobile home parks as well, anywhere from 30 to 500 pads, same geographic markets, same sort of asset size. That's kind of the Carmel Rock buy box.
Mm-hmm. Okay, cool. So then with those, the mobile home parks, what kind of distance from a major MSA would you be interested in? Like, is it like a 1 hour drive, 2 hour drive?
Yeah, anywhere within 60 miles. So about an hour drive is kind of what we're looking at.
Okay, beautiful, beautiful. And that brings me to a question which you actually addressed a little bit of before, which is that nobody is going to be all six sides of the die for any meaningful amount of time. We're all stuck with wearing more than one hat, even if we don't really feel like it. But at the same time, there are going to be different people on the team doing different jobs. And that means that we are all so eager to help give referrals, references, help build new teams. But at the same time, because of our own unique skill sets, we're going to be better off helping some people more than others. Me personally, because of all the tech, online, influencer background, all that kind of stuff, the sponsors and KPs are the people who I'm most eager to speak to, because they've actually got a foundation that can support somebody like me, where I can make a disproportionate difference. Whereas when you're first getting started, it's not so much of a finesse game as a brute force game, 80 hours a week and that sort of thing. So the sponsors I'm always eager to speak to. And then, of course, I'm from the internet, so I need to talk to the locals quite often as well. But Christopher, as far as you're concerned, if you have any 506B deals, don't mention them specifically, because that's bad. But and you can also mention that you're interested in speaking to passive investors. That's perfectly fine, but just don't mention the deal. But who are you best suited to help?
who am I best suited to help, or who am I kind of looking for?
Well, sure. You can say both if you want. It's up to you. But like, who on the die? Who like describe who might be in the audience who you can help disproportionately well.
Yeah, so I would really say it's three different things that I can truly, maybe four. I can't count. Um, on the construction side, all I got to do is ask Siri to call my dad, and I can get a GC contact and number for you pretty darn quick. What I also had a lot of experience in and kind of what helped me pay the bills for the beginning part is being in the architecture business. I have an architect partner who all we do is architecture stuff. So if it's architecture thing that you guys need help with, please hit me up. This guy is from New York City as well, and so a lot of his clients are really rich people, talking about ultra high net worth, $200 million net worth sorts of individuals who have a bunch of capital that they may want to deploy in a really great deal. So, if you also have great deals, maybe I can try to connect you to somebody with a lot of capital. And then thirdly, like I was saying about the Atlanta developer I was working with, I was mainly doing financial underwriting. So I have a bunch of experience in crunching the numbers, being an Excel monkey, as they refer to it. So I can kind of help in that way. And then local boots on the ground as well. If you're looking for deals in Louisville, Kentucky, Nashville, Tennessee, anywhere kind of around those areas, I can be your boots on the ground if you're from the internet, like Dan said. So that's kind of this is kind of the value I can provide. And that is also the value I'm, trying to obtain out there too. It's what I can provide, because as you'll know, it's a relationship business. The more that I can sort of give in that sort of way, the better we'll all be. So that's kind of the short of it.
I love it. I love it. I love it. So that brings us to the question of how to reach out. Me, I got this really distinct last name, so that makes it pretty easy to find me, especially on LinkedIn, which is a social media platform that I spend most of my time on. But if you scan this QR code right there, that brings you to the FAQs page at 506BME, which is where I offer the service to syndicators of storing all the IT, helping you with the documentation of your substantive relations, which is important because once you get to a certain number in assets under management, the SEC audits everybody, and you need to have that documentation to prove that you knew people and you knew their suitability before you were pitching them on your private deals. So you can reach out that way. But Christopher, you mentioned your website. I don't know if there's also social media, email, phone. What are the best ways to reach out to you?
Yeah, so you can find me also on LinkedIn. That's kind of where I spend a lot of my time. Just Christopher Elder. My website as well, www.carmelrock.com. You can find a lot of info there as far as how to get in touch if you're interested in any sort of way, any way that I can really help out. Please feel free to go there and kind of get in touch that way. And then on my LinkedIn too, just shoot me a message. I'll give you my phone number. We can chat about the weather. We can chat about real estate. We can chat about whatever you want. So like I said, it's great to be here, and appreciate you, Dan, for having me on.
All right, I love it. And that brings us to the last thing. It's actually not for you, Christopher. It's for you in the audience. It's my public service announcement. If you've been watching this episode and you've been experiencing searing pains in your eyeballs, maybe migraine-like symptoms, I'm confident it's because of the hideous subscribe button that's down there, and it's really easy to get rid of it. You just click on it. It's totally free. And the reason why I want people to click on it is because if enough people do, then YouTube will actually start paying for these videos instead of me. And I think that would be amazing. The trade-off for you, by the way, is my videos may show up on your list of suggestions, but you can feel free to ignore those suggestions, because frankly, I just appreciate the fact that you spent this time with me. Just like Christopher, I appreciate you joining me today. It's been great getting to know you a little bit.
I love it.
Awesome.
Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay, are you already logged into 506B me?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, You can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506 Beamy, everybody.